What is up, guys? Welcome back to Road to the 2 Comic Club. I'm Justin, and Dow is up again, 6th day in a row, and I'm watching Power Lunch right now. And by the way, Josh Brown is my new favorite guy. I used to like Jim Cramer until people told me about that interview he did where he openly admitted to manipulating the markets and reporting fake news to kind of scare investors, and so the prices will go down. Really, really weird. I was not expecting to see that, but when I saw it, I was like, what the? I'm surprised he didn't get arrested personally, but Josh Brown, I really like. He's funny. This is Power Lunch. It comes on around 11 a.m. Central Time, noon Eastern, obviously. And he was saying he brings up good points. He's also pretty funny, but and how convicted he is of his opinions. But he was mentioning a lot of cool stuff today. He was saying he's mentioning now, and this is important. Now that the Dow is coming back, everything's rebounding. He said everything is up. The stocks are up. Even gold is up. Treasury notes are up. Bitcoin is up. And only 2 of the 30 Dow stocks are down for this week. But his whole point is, and he said 4 out of the 5 sessions, the Dow or the S&P went up over 1%, 1% or higher, which has not happened since October 2011, literally almost 7 years ago. And Apple was up 11% this week. But his whole point is, we're not out of the woods yet. We shouldn't get into the mindset okay, everything's back to normal, we're gonna have a skyrocketing year like 2017 again. He said 2017 was the aberration, was the anomaly, was the thing that shouldn't really have happened. That's not how markets normally operate. A 10% correction like we've had earlier this month is an annual occurrence. It happens on average every 11 months from what I read before in an article. So they also said that the average correction takes 64 days to recover. This one only took 9 days. It's recovered almost all of it. I think it's at least 2/3 is recovered from the highs of last month. And some of the guys were thinking is because of the volatility, like the VIX traders, the algo traders, which are traders who use algorithms and computers to trade, so they trade lightning quick. But Kevin O'Leary thought it was just because people were he called them the bond vigilantes, were basically scaring everyone, thinking the bonds are going up really high, so people should start moving their money into that. He's on the team that says, I will never put my money in bonds unless they're promising me at least 3.7%. Even then, I'm only going to put a little bit into it. But right now, there's just no competition for stocks. If you get a stock that's growing and paying dividends, a lot of stocks are raising their dividends. Apple raises their dividends pretty much every year. So he's there's no reason for me to put money in bonds. And I agree with him. As long as the interest rates are where they're at today, I don't see any reason to put money in bonds. That's my personal opinion. Again, not a financial advisor. But anyways, the tech recovered 11% since the low of last week or so. So that is awesome. My arm's getting tired, so I'm going to have some lunch. And we're up a little bit for the day, a couple grand, but this is perfectly fine. I want some stock, like Jim Cramer was actually saying, and I do agree with him on this. He wants stocks to be up and down at the same time, because if everything's up, it can set up another crash like we had a couple weeks ago, and I agree with that. We need the Dow. In fact, I was hoping the Dow would actually finish even or down today, just so that we can kind of cool off. But it's only up 158 points. With the Dow being as high as it is, that's not too much. It's only 0.63%. Let me just show you because I keep looking at it. I would be totally fine if the Dow finished like that today, and then if they finish down on Tuesday, maybe the same amount. We do need the Dow to come down a little bit, because 6 days in a row is a lot. It's unrealistic to keep going up every single day, but small gains like this is totally fine. Obviously I would take those every day, obviously. But yeah, so that's where we're at right now. I'm going to do some more editing, and then I'm just going to come back at the end of the day, and then we'll see how we did.
What's going on here? Nobody's buying bologna. Nobody wants processed meats sliced in a factory. They don't want turkey that's basically boiled goo turned into something in the shape of a slice of turkey. So Kevin is spot on.
That's why I like this guy. You're just so brutally honest. It's so funny.
S&P 500. I don't see any reason why it's.
He said it's one of the worst charts in the entire S&P 500.
There's
no activists coming in with 3 Gs involved.
Oh, that is so funny. Anyways, all right, lunchtime. What's up, guys? Welcome back. Okay, I know I said I was going to film later on Friday, but I didn't get a chance to finish, and then the weekend got ahead of me, or away from me, and now it is Monday. But I did take some screenshots, so I'm going to talk about how we did in the stocks, and then we'll talk a little bit about news, and then we'll wrap it up. So I'm just going to read off from the screenshots that I took, and then, yeah, we'll go from there. So here we go. All right, so I believe we did lose a little bit of money today, but not anything crazy. So we did have some winners, though. We had Tesla Finishing up 17% our Tesla 370 strike calls. We also had some good performances with Lamb Research and then Roku and also Domino's Pizza. Really excited about that. Domino's Pizza is doing pretty well right now, so I'm hoping they can keep that momentum going. Let's look at our losers. All right, so you can see that there's a bunch of stocks that didn't really move, or options that didn't really move for us. And then our biggest losers, though, today was Universal Display. That actually worked out well for us because that covered call that I did sell did expire out of the money. So we get to keep our shares. And then on Tuesday, I'm going to sell another one and hopefully get some more money for that and hopefully repeat this process and just kind of have the ideal scenario, of course, having Universal Display go up a little bit at a time, but never hit those strikes on the calls that we sell because we don't want to lose our shares. But yeah, so they did bad yesterday, but a little silver lining, we got to keep our shares. Anyways, and then also Riot Blockchain had a really rough day. I'm not sure why, but at this point, I'm not thinking it's not worth me selling. I'd rather just wait to see what happens and see if that can come back up. But yeah, other than that, let's go to the watch list. So Jack in the Box must have had some good earnings. I think they did report good earnings because they were at the top of the list. And even though Roku did well, Riot Blockchain that did bad. Never mind. But yeah, Roku did really well. I'm still hoping that they can get acquired or something, or just go up in general because we got some calls on them and we can make a lot of money with that, obviously. But Domino's Pizza, I'm really excited that it's back to 220. That is really, really good. I think our strike is 230. My memory is really bad, but yeah, so that's excited. I actually got some Domino's Pizza this weekend, so to kind of help them out. So, and yeah, I need to stop eating so much pizza, but it's just so good. All right, anyways, we got Weight Watchers. Speaking of, that's what I should be on. But we also got Tesla, and then we got some other stocks here. Let's look at the third page. Then we got Nintendo. I also bought a Switch recently. So I'm trying not to play too much though, but it's addicting. So I'm just trying not to play too much, but it's a lot of fun. I do love the portability of it. I didn't think I was going to like it that much because it's just really convenient to just bring wherever you're at in the house. It doesn't need to just be sitting in one spot. But yeah, so that's really cool. And then we got the losers here. Let's look at the next page. We got Kroger there. We got Netflix. It was actually, if you look at the bottom of the screen, we had NASDAQ did go down. The Dow went up, that was the 6th day in a row for Dow to go up. So that was really exciting for them. But I'm actually glad the NASDAQ went down a little bit because I want them to not be so hot because I don't want to have a huge crash day like we did twice already this month. So I want it, when it goes up, I kind of want it to come down a little bit so that it doesn't get ahead of itself. I don't want it to pull too far away from that moving average, the 50-day moving average, because then it tends to kind of snap back to it. So here is the 5th page, and you can have a look there. Amazon's on that page. And then we have the 6th page. We have ST Microelectronics, GoPro. I really don't know what's going on with them. This one has a halt on it right now. This is a Canadian marijuana stock, I believe. I'm not sure why there's a halt on it. I haven't really been reading on it, but that's just usually not a good thing when that happens. But then we have the last page here, more marijuana stocks, and then Riot did absolutely horrible. So I don't know what's going on with that. I did see on TV that there was kind of a sketchy situation. And I'll talk about that when we finish. So actually, I don't want to talk about it here. I'll wait till I'm done with this. All right, so yeah, I am done with this. So let's just come back to me. All right, so I was looking at some articles. There's not really much news going on with the companies that we're investing in, but I did find an article that mentioned the correction, so I want to talk about that, and that's pretty much all I'm going to talk about. So this article is called "Stock Bubbles Have Popped and Correction is Consolidating. What's next?" So this was from Richard Stutmeyer, who's a contributor or whatever. But anyways, this article has a lot of technical analysis talk, so I'm going to put a link in the description because I'm not 100% familiar with all these terms. He mentions the term stochastic, and I don't know how that works. I've only heard it mentioned before. But I'm going to read this paragraph to you that kind of makes me feel a little bit better. It says the weekly chart for the Dow is neutral with the average above its 5-week modified moving average of 25,119. The 12 by 3 by 3 weekly slow stochastic reading declined to 72.97 last week, down from 84.44 on February 9th and down from 94.49 on February 2nd. I understood none of that, to be honest, but it looks like the lower the number, the better, because it said the slow stochastic reading declined to 72.97 last week, and then it was 84.44 the week before that, and then 94.49 the week before that. So I think I'm basically guessing the lower that number is, the better. So if you know about this, please comment in the comment section below, because I do not, but I think that's how it works. Then it says the average is no longer overbought and no longer an inflating parabolic bubble. So that is some good news. Whenever they say things are overbought, that means obviously they're overbought, and too many people are buying them, which is driving the price like unrealistically high. And a parabolic pattern is too quick to grow, and so we want that to kind of pull back a little bit. And it looks like it's happening. Again, I am happy that the NASDAQ finished down a little bit on Friday, so I am glad. Well, today technically for this video, but I am glad that happened. And I'm hoping it kind of calm down. I hope volatility continues to go down, and that should kind of set us up for more incremental gains over the course of the year. And that's all we need, because I don't pick strikes that are way too out there. And as long as we hit that, we should be making some good returns. So we're gonna leave it at that. If you have any questions, please comment in the comment section below. If you like this video, please hit that like button and subscribe if you haven't already. And share with your friends if they're interested in getting into investing. I don't know if I would recommend doing really risky stuff this year, just because I don't know if it's gonna be as good as 2017, but the jury's still out on that. January was like ridiculous, but February's been kind of shaky. So, if they want to get into stocks, just show them this vlog, and they can kind of see how I've been doing with options. But I am doing more in stocks, and so we're going to see how that plays out for the rest of this year. So, thank you guys so much for watching, and we will see you tomorrow.